Hello, everyone. Thanks so much for joining us. My name is Yasir Iqbal. I am the Construction and Infrastructure Editor at MEED. It's my pleasure to host you today for this much anticipated webinar. We'll get started at exactly 11 past 5 local time here in Dubai. And while we wait for a few more people to join, we will be shortly displaying a QR code on the screen for a copy of today's slides. So feel free to scan the QR code and have a chance to grab the copy of slides. And as ever, please drop any questions you have for me in the comment section, which is on the right side of your screen. I'll do my best to work with them as we go, and we'll leave time for a proper Q&A session at the end of this presentation. Thank you so much again for joining us. Let's wait for a couple more minutes for more people to join in. Please feel free to let us know in the comment box from where you are joining us from. It would be great to know the geographical spread of our viewers today. And if you have any insights to share with us, any comments, any interesting insights about Saudi Arabia's projects market or GCC projects markets as a whole, please feel free to type that in the comment box. We'd love to hear your thoughts on that as well. Great. So we got people got a truly international audience here. We've got people joining in from Australia, Germany, Spain, South Africa, Saudi Arabia, of course, India, Turkey, UAE, UK. Great. Again, for people who have just joined us in, thank you so much for joining us. We'll start in about 2 minutes' time. And while we wait for a few more people to join us, please feel free to scan the QR code, which is displayed on the screen, to get a copy of today's slides and drop any questions you have for me in the comment section on the right. I'll do my best again to work with them, and we'll obviously have a Q&A session at the end of this presentation. So keep those questions coming. We can see the flow of people coming in. We've got people coming in from Africa, Morocco, Kuwait. We'll wait for a few more seconds, and then we'll dive straight into the presentation. I want to again repeat that if you have any interesting comments, insights, any feedback on the market, please feel free to type that in the comments box. Would love to hear from you. Right. I think we've got fair number of people joined in. Let's dive straight into it then. Okay. Good morning, everyone, and thank you for joining us today. I'm Yasir Iqbal, construction and infrastructure editor at MEED and Global Data. And over the course of next hour or so, I'm going to walk you through where Saudi Arabia's Giga projects program actually stands, the broader market outlook, where contracting activity is flowing, and where the real opportunities sit for those of you who are tracking this market closely. Please bear in mind that this is a data-driven session built on our own proprietary intelligence. So I will be sharing quite a few numbers, but I'll try to keep the through line pretty simple. And before I get into the presentation, I would like to display. Here you go. Right. So before I get into the substance, just a quick note: we're just about to release the Saudi Giga Projects Q3 2026 report. Like I mentioned, everything I share today draws on MEED's proprietary projects intelligence. This is our analyst verified database that tracks contract awards, pipelines, stakeholder activity continuously across the kingdom and the broader MENA region. If you want the full picture beyond what I can cover in the session, such as the detailed contract awards, project activity, upcoming pipelines, the funding, the reprioritization story, and a market risk and investment outlook, there's a QR code on the screen, which will take you straight to the full report. This is a quite detailed report, over 750 pages. So you'll be able to find a lot of details in there on all the official and non-official Saudi Giga projects, fairly well detailed, and should be great to in understanding the market. To begin with the presentation, let's start with the macro picture first, because I think it actually tells a more encouraging story than the headlines around the recent tumultuous situation around the region would suggest. So, about Saudi Arabia, in January, the IMF was genuinely bullish on Saudi Arabia. It forecasted 4.5% growth for this year, which was up from already strong 4.3% in 2025. That confidence was rooted in real fundamentals, such as a rebound in OPEC plus oil production and steady non-oil demand tied directly to the Vision 2030 reforms. But then, obviously, the war happened, and yes, the forecast did come down. It dropped to 3.1% in April and then 1.7% in July as the Hormuz-related disruptions hit Kingdom's oil exports. But I want to focus more on the positive numbers, and here's the most important number. Saudi Arabia is actually holding up better than almost anyone else in the region. The regional mean of growth forecast by IMF has been slashed all the way up to 0.7% for this year, which means that several neighboring economies are now expected to contract outright. But that's contrary to what's going to happen in Saudi Arabia. Saudi Arabia is posting real positive growth even through this regional war. And then that itself should be considered as a headline. The IMF has penciled in a rebound to 5.5% growth for Saudi Arabia going into 2027. But that's obviously conditioned on the Strait of Hormuz normalizing by March 2027. We'll see how that pans out. But in other words, I mean, the World Bank's own model treats this as a temporary war-driven dip rather than a long-term trend, which is otherwise a structurally sound growth trajectory in Saudi Arabia. That takes us to the Public Investment Fund's 2026 to 2030 strategy. Against that backdrop, in April, PIF approved and released details of its long-awaited strategy for this period. We all had been waiting to hear from the PIF, especially after the 2024 reprioritization story. This strategy has been several years in the making. I think the spending started in 2017 and then reached its peak in 2023, which was good 6 years of time when there were projects everywhere. The spending levels had reached the record levels, and PIF did spend that time reviewing the scale and obviously the delivery timelines of its various giga projects. And with this strategy now in place, what's emerged now is a pivot towards a more focused and disciplined investment model. So in a nutshell, I don't want to go through this slide in detail, but I'll just give you a brief overview what PIF has basically laid out in the strategy. It has structured its investments into three different portfolios. The first one is the Vision portfolio, which houses the Giga projects and is considered as a central pillar to this strategy. PIF has laid out a renewed commitment to the private sector in delivering the Giga projects. Next is the strategic portfolio, which includes managing PIF's key existing assets. And the last is the financial portfolio, which is focused on sustainable returns and capital efficiency across global markets. This strategy also identified 6 core domestic ecosystems that are intended to drive the non-oil GDP and diversification efforts going forward. And these include tourism, travel and entertainment, urban development and livability, advanced manufacturing and innovation, industrials and logistics, and clean energy, water and renewables infrastructure. And that's the framework for all of you joining us today. That's the framework I would encourage you to keep in mind going forward. So for anyone who's newer to this market, let me quickly ground us. The Giga Projects program sits at the heart of Saudi Arabia's Vision 2030, which was a plan launched in 2016 by Crown Prince Mohammed bin Salman. The plan was launched to diversify the kingdom's economy and to transfer the kingdom into a tourism and entertainment hub, and diversify the economy away from its traditional dependence on hydrocarbons. Now, at the time, there were 5 officially designated Giga projects. These include NEOM, Diriyah, Qiddiya, Russian, and the projects developed by Red Sea Global. Now, the numbers, by the end of June 2026, nearly $92 billion worth of contracts had been awarded across all 5 official Giga projects. This year so far, the highest contract was awarded by Ruwa Al Madina for the construction of its Super Block 5. It was a close to $2 billion worth of contract that was awarded to the Chinese contractor CRCC. But beyond that, there is, however, a trend line that matters as much as any single number. If you have followed the Giga projects closely, you would have noticed that after 2023, when the record number of contracts were awarded, which were about 33 billion in total value, these contracts started to drastically increase, first by 20% in 2024, and then dropping sharply by further 48% last year, which sort of gives you a flavor where the Giga projects were headed at the time. Industry experts attribute that slowdown to a number of reasons. First is the shift from ambitious planning towards focusing more on delivering the existing projects which are under construction. These come with tight deadlines. So we've got a deadline of 2030 that was initially attached to these projects. So there are concerns in the market about whether there was enough capacity in the markets, whether there were enough capable contractors able to deliver these projects, the supply chain, the materials. And with all these disruptions in hormones, I think PIF realized that they needed to put the brakes on to hold the spending for a while. So why did that slowdown happen, you might ask, in the first place? This is where the broader shift of priorities to a certain extent and geopolitical picture comes in directly. For any of you who attended the PIF's private sector forum in Riyadh last year, if you remember in the opening session, Khalid Al-Fali, who was the investment minister of Saudi Arabia back then, he said it on stage in the opening session, and he put it out quite bluntly, saying that the kingdom will deploy its capital in more urgent programs. Hence, the more ambitious and programs would have to be sacrificed for that. So basically, he was trying to say that Saudi Arabia did not have World Cup 2034 at the time of launch of these Giga projects. They did not have Expo to host. So in order for these urgent events to be delivered in the kingdom, other projects had to be sacrificed. Now, clearly, the line was announced many years ago before the Expo and the World Cup. So it's quite a reasonable rationale to reshuffle the whole program. For example, projects like the line, Trojena, but broader NEOM, for example, bore the brunt of being rationalized for more immediate programs like Expo and World Cup 2030. However, the recent heightened global geopolitical risk stemming from the Iran conflict has also introduced real uncertainty for the foreign direct investment, and that's sort of prompted PIF to re-evaluate its financial outlays. I've been speaking with a lot of people in the market, and there is a genuine concern about the impact of this war. The longer this war drags on, the bigger the uncertainty is going to be. But more specifically, and this is a number worth sitting with, the regional conflict has forced the kingdom to divert tens of billions of dollars towards emergency military equipment and air defense replenishment. And when the government is putting billions of dollars worth of money into the defense, which is considered as a national priority at the moment, it means that the capital directly gets shrinked to be deployed for other projects, which would include Giga projects construction as well. In this sense, NEOM is a clearest case study. We've seen plans being significantly scaled back based on feasibility and financial grounds. The most visible casualty was Trojena. There was a feel in the market that Trojena at least would proceed, but which was obviously supposed to host the 2029 Asian Winter Olympics. But in March 2026, NEOM cancelled the Weebles $5 billion dams package along with Eversendai and Al Bawani's steel contracts for the ski village. Those really were statement announcements, which sort of, was a precursor for what was going to happen in Trojena. There were also big tunneling contracts and railway contracts cancelled with local and international contractors for the line. And all in all, that's led Kingdom and the Olympic Council of Asia to reconsider Almaty as the alternative host. So all in all, it's we can say that NEOM has sort of been taken to the backseat, and the other projects will be delivered instead of in its place. And beyond that story, the NEOM's overall headcount has been reduced substantially as well as the organization reorganizes around its, let's say, high priority components. One example of that is the Oxygon. There's still boat project happening there. There's the NEOM's green hydrogen project, which is about to be completed. So they've got they've got these two massively important projects coming up in Oxygon. So we might see continued investments going into Oxygon, but not so much into the other areas. There's also been reports in media recently that Red Sea Global might take over the Sindala Island development, which would sort of fit into its broader portfolio of developing tourism destinations. And bear in mind, I mean, after the war, there has been a lot of investments going into rail and port projects. We'll get to that later in this webinar, but Oxygon port stands a great chance of sort of being upscaled and the investments being poured in there. And generally speaking, and this is across the wider Giga projects portfolio, the pattern is sort of consistent. There is non-essential advisory work and capital-intensive components. These are usually the first things that are being phased out or delayed for the considerable amount of future. Right. So this slide is really a reference map. So let me talk you through how to read it rather than looking at every logo on it. So you've got three tiers here. There are the PIF subsidiaries that sit above the program at the top left. These are the 5 official Giga projects themselves, including NEOM, Diriyah, Qiddiya, Roshan, and Red Sea Global. And then a set of non-PIF entities that also play into this landscape. It's worth knowing that Seven, the entertainment venues operator, actually sits under Qiddiya rather than a separate line item. And beyond the 5 headline Giga projects, there are other developments owned by PIF subsidiaries that don't always get the same airtime, but they're still there. These include the Project W Monolith Resort under the Destinations Development Company, Global Khali Desert Resort, and the North Pole. Now, this map gives you the geographic and financial scale of the program in one view. Across everything shown here, total planned value as tracked by MEED projects is $925 billion, of which about $130 billion worth of work has been awarded to date. So you can still see how much scope there still is in the Giga projects program, given the fact that most of these projects would move ahead. A few anchors worth calling out in this map would be New Murabba, the world's largest downtown development. It's about 19 square kilometers located in central Riyadh. NEOM itself, Alula, Red Sea Global, which includes Amala, Qiddiya Entertainment City, King Salman International Airport, and closer to the historic core, you would place projects like Diriyah, Jeddah Central, and Ruwa Al Madina. You'll also see King Salman Park, Sports Boulevard, and Green Riyadh, which act as a livability layer of the program, but don't always get the same attention as the flagship tourism projects, but is central to that urban development ecosystem I mentioned a moment ago. Now, let's quickly have a look at the award data properly. This is based this is based from MEED projects, data from MEED projects. And this chart is really the clearest evidence of everything that I have described so far. If we look at the screen, contract awards grew almost every year from 2017, crossing the $30 billion mark for the first time in 2023 at about just over $34 billion. From mid-2024 onwards, several projects within the program were reviewed, rescoped, reprioritized, whatever way you want to put it. And then you can see that feed into the data directly. 2024 came in at $27.5 billion, down almost 20%. And last year fell further to $14.3 billion, which is a decline of nearly 48%. That's quite a steep decline. And through the first half of this year, award activity has also remained subdued. Breaking it down by client tells, in my opinion, an even sharper story. Last year, Diria alone received almost $7 billion worth of contracts, while NEOM, historically the largest client in this Giga Projects program, received just $70 million. So that gap on its own tells you everything about how the reprioritization has actually played out in practice. By sector, construction and transport together account for almost 80% of the total Giga Projects contracts awarded between 2019 and 2026, which basically tells you where to focus if you are positioning for this market. So here's the summary line I would leave you with on this slide. Saudi Arabia is basically pivoting from a build everything at once approach to a more phased reality. With that, we'd like to put up the poll question, the first poll question of the day. Let's pause here. And I'd like to hear from you, how confident are you that Giga project spending will return to 2023 levels or more? And I'll share the results with you shortly, and it will be interesting to see how that compares with what the data is actually telling us. Let's wait for a few minutes and let's see what the results are. Okay. So we're still getting votes. We've got about 100 votes. 52% of you are saying not at all. 36% are saying quite confident, and only 12% of you are very confident that the award levels will surpass 2023 numbers in near future. Well, that was expected. That's in line with what we just discussed, and that's honestly what the data is telling us as well. Right. Let's go to the next slide and let's look at what's actually been awarded this year to date. This table is ranked by value of the contracts, and the pattern should already feel familiar from the last slide. Diria and Qiddiya dominate the top of the list. As I mentioned before, the single largest contract awarded this year was about $2 billion worth of deal for Royal Medina Super Block 5. Right behind it is Qiddiya's racecourse venue main works package, which comes in at $1.1 billion, followed by Qiddiya's National Tennis Center, estimated at about $800 million. Diriyah then takes the next two spots with Superblock, Waldorf Astoria Superblock, awarded at $727 million, and the Pendry Superblock at $666 million. And from there, the list tapers down through King Salman International Airport's Terminal 6 substructure works, several more Diriyah and Qiddiya packages, and smaller awards across Roshan, Neom, Red Sea Global, and Al Ula. The full ranked list is on screen. If you want to note specific projects relevant to your business, you'll obviously have this presentation. If you have scanned the QR code, you'll be able to look at it in your own time. But please bear in mind, we have this and much more covered in our report. So just a quick repeat of the QR code here. If you'd like the full data set behind everything that I'm walking through, that's where you will be able to find it. So please take out your phones, scan the QR code, and take a look at our latest Saudi Giga Projects Q3 2026 report, where you will get data like this and more, broken down client-wise, projects-wise, sector-wise, across the Giga projects. Right, so let's go to the next slide. and discuss the recent developments that have taken place across the individual Giga projects. I'll go through each one in turn, starting with Qiddiya. Qiddiya has been one of the more active projects on the contracting side this year. On the contracts already awarded this year, an estimated 1.1 billion, as we already discussed, to Taj Dhabi, which is the local subsidiary of Trojan General Contracting of UAE. This was awarded for the race course, and $800 million contract to a JV of Bouygues and Al Mabani for the National Tennis Center. And then a multi-million-dollar contract to Al Seif for the exclusive viewing lounge, which is part of the Speed Park. And then China State was awarded two contracts separately, one for the Janadria Cultural District and the other one for the Northwest Transport Hub. In terms of what to watch out for in the near term at Qiddiya, well, there's a lot of action happening in Qiddiya. There's a lot of work coming out from Qiddiya. In terms of what to watch out for, there is a tender is expected for the Qiddiya high-speed rail project, especially at the particularly for this project. This might be out end of September or maybe in Q4. The pre-qualifications have been completed, so now the market is expecting the tender for the project. Tendering has also started for a package at the Dragon Ball theme park. If you want to know more details about these packages, please, like I said, scan the QR code, go to the project, you'll be able to find things there in detail. And last month, QIC also invited contractors to pre-qualify for an indoor sports arena, which will be built to the International Olympic Committee standards. There's also a cable car facility that will link the upper and lower plateaus, which is in advanced stages. This will include a 700 space car park and a 200-meter high pylon. And in May, QIC, which is Qiddiya Investment Company, requested expressions of interest for the first phase of the light rail transit system, which is a 22-kilometer automated driverless rail line. QIC has also issued the tender, will also issue the tender for the National Athletics Stadium, which is estimated to be a $2 billion project. This is expected to be issued later this year. This stadium is benchmarked against the London Olympic Stadium. It's quite a big job, quite a significant job. Now to the next project, which is Diriyah. As we have already seen from the award data, Diriyah has been a standout performer in 2025 and this year as well. This year, Diriyah has recorded major contract awards almost every month. In July, it announced a $105 million contract for the main construction works on the iconic park. The contract was awarded to the local firm Satco. A $400 million package for a contract covering the MEP and finishing works at Diriyah Square, which was awarded to UCC Saudi, the local subsidiary of Qatar's Urbacon. And then in June, a $727 million contract was awarded for the Waldorf Astoria Superblocks, one of the largest contracts this year, which was awarded to the joint venture of Hassan Alam and UCC Saudi. And then in May, a $195 million contract awarded for SWIC quarter buildings at Diriyah to RTCC. A month before that, $490 million contract was awarded for the Saudi Arabia Museum of Contemporary Art to Hassan Alam and Al Bawani. And then a $666 million in March for Pendri Superblock to Saudi Constructioneers. And then a month before that, $192 million contract was awarded for the construction of one hotel, which was awarded to BEC Arabia and Indian contractor Ashoka Buildcon. Looking ahead, over $7 billion worth of contracts are slated for award this year. The major ones to watch out for are the Boulevard Northeast mixed-use development, Opera Block townhouses, the Edition and Montage hotels, and the Media Innovation District, which obviously includes the MBC headquarters and media campus and the North offices. Moving on to the next slide. Now we'll have a little bit of change in geography and move to Makkah. The project King Salman Gate, which was launched in October last year by PIF subsidiary Ruwa Al Haram Al Makki. It's a multi-billion-dollar project spanning across 12 million square meters, which is located directly opposite to the clock tower, which is also known as Abraj Al Bayt, and is designed with a fairly similar visual language. There isn't a huge amount of detail on scope released yet, but alongside about 24 plus high-rise towers, it will feature a praying balcony, which is aligned to the Holy Mosque's prayer lines, adding in total of about 800,000 new prayer spaces in total. So that's going to be catered as essentially as an extension to the Mataf in Haram. The Jabal Al Kaaba Road and Zamzam Plaza will function as the project's major entrances. I was there on the site recently, and early construction works have already started, and these are being undertaken by the Riyadh-based contractor Al Enjaz Trading and Contracting, also known as Enjaz Corp. The next project is King Salman International Airport. We all know about this project. Going to be a huge project, which will cover roughly 57 square kilometers. It will incorporate the existing terminals at the King Khalid International Airport. The target for this project is to accommodate up to 120 million passengers by 2030. On the contract activity, the client has already awarded the substructure and enabling works for Terminal 6. And most recently, the firm submitted the pre-qualification statements on 2 new packages, which is the first one is the East-West corridor, and then there is a landside access road serving the north and south terminals. For T6 apron, taxiway, and airfield infrastructure, 3 groups were selected, which was reported by MEED on an ECI basis. And then in March, the client also selected 3 groups separately for the main Terminal 6 construction works, which is also being delivered on an ECI basis and expected to be awarded shortly. Construction is also ongoing on the 3rd runway. These are being undertaken by Al Mabani in JV with Spain's FCC. Right, so the next project that I would briefly want to talk about is the Expo, Riyadh Bowl Expo 2030. It's built around 5 districts covering 6 million square meter total area. We're expecting 197 countries to participate in this expo. Work is now essentially underway on the major infrastructure, which is needed to get the site ready for structural works. The first major contract, which was for the Lot 1, the main utilities corridor, was awarded to Nesma late last year. These were followed by 2 other contracts for Lots 2 and 3, which was awarded to Al Yamama. Currently, tendering is ongoing for Saudi Arabia Pavilion itself, which is going to be a main iconic asset, which with the bids due, I guess, on 26th of August, if my memory serves me correctly. And on the contracting side, last year, Riyadh-based contractor Binia also signed a 4-year framework agreement with Expo to execute early works across the site. So that is that. The big one, the talk of the town, is the stadiums program. Now, one of the major construction schemes in Saudi Arabia right now is undoubtedly stadiums program and its related infrastructure, in which the kingdom will likely invest hundreds of billions of dollars. If you look at the chart on the right, back in 2024, the kingdom confirmed plans to construct 11 new stadiums as part of its winning bid. 8 of the total 15 stadiums are located in Riyadh itself. 4 were planned in Jeddah, 1 each in Al Khobar, Abha, and Neom. The bid proposal, the official bid proposal, also outlined 10 additional cities to host the training bases. These were to be built in Al Baha, Jazan, Taif, Medina, Alula, Umlush, Tabuk, Hale, Al Ahsa, and Breda, along with 134 training sites nationwide. 61 of them are existing facilities and 73 will be newly built. So you can get an idea of the scale of this whole program, which is going to be delivered. And to be honest, the time is on Saudi Arabia side. 2034 is still a long way ahead. There's a good time to plan for the construction of these facilities. The showpiece venue for this event will be the King Salman Stadium, which is located in North Riyadh, next to the King Abdulaziz Park, where the construction is already happening at this point in time. This will be a 95,000-seater stadium and will be the venue of the final game of the 2034 World Cup. Several other stadiums are already well into the delivery phases, including the Aramco Stadium, which is nearing completion. It's being delivered by a joint venture of B6 and Al Bawani. Then the construction works are also advancing on the King Fahad Sports Stadium, delivered by SPG, and Jeddah Central Stadium, and the Prince Mohammed bin Salman Stadium in Qiddiya. Huge projects, but there's a lot more to come for the stadiums program. Now, one of the clearer structural shifts that we are tracking at MEED is the Giga projects developers sort of leaning harder into the real estate as a funding mechanism. And Mecca is a good example of how that's playing out. Al Qura, the developer behind Masar destination, announced last month that it was awarded two sites for the developments. One is Hindavia West and Hindavia South. These are both right next to the Masar destination. These were awarded to a consortium of the Al Qura Makkah Construction and Development Company and Raji United Real Estate Company. The project will be developed under the name Masar Gardens and will span an area of 1.2 million square meters. Al Qura also signed a lease agreement with the Riyadh-based Osus Real Estate for 3 plots within the Masar project, and separately announced 3 residential towers located in the area closest to the commercial complex, which will be developed at an estimated cost of $266 million. The other Giga project developer, Al Aram Al Makki, recently signed 4 MOUs with local developers and international developers to assess the real estate opportunities at the upcoming King Salman Gate project. It also partnered with Forbes Global Properties to tap into their global brokerage network to woo the international investors and homeowners. And this is very much the model that we have seen work quite so well in Dubai, and looks likely to being replicated in Saudi Arabia as well. I want to spend the reason why I included the rail into this presentation, because I think it's genuinely one of the most active corners of this market right now. Saudi Arabia, for those of you tracking the market closely, is undergoing its most intense rail investment push in decades. These span the urban transit, the high-speed rail, the freight corridors, and the GCC rail as well. I want to touch base very shortly on some of the major rail schemes which are in the market, are going to be in the market very soon, something that I thought would be useful for the market to know. The first one, the major one, is the GCC rail link, which will run from Kuwait border to the UAE border. MEED reported yesterday that the consultants have submitted the design consultancy bids earlier this month for the 672-kilometer Saudi section of the project. This will connect Kuwait to the UAE via Dammam. This scheme is part of the wider over 2,000 plus kilometer Pan-Gulf GCC rail network. The other one is the Saudi Land Bridge, the Riyadh section of Saudi Land Bridge. This is a 35-kilometer line connecting the Saudi Arabia Railways North-South Railway to the Eastern Railway Network. Again, the contractors have submitted proposals on 30th June and clarifications are currently ongoing. Once this project is realized, it will drastically cut the freight transit times from days, possibly down to hours. And then, last but not the least, Qiddiya high-speed rail will run at about 250 kilometers per hour. This will link the Qiddiya entertainment city directly with the King Salman International Airport, which will basically cut what's currently a approximately 2-hour drive down to about 30 minutes. Consortiums have formed for both PPP and EPCF packages. This project is basically will be delivered on two separate models. So there is a PPP package and there is an EPCF package. The consortiums are forming at the moment, and the main construction tender is expected to be floated later this year. Now, continuing on rail, this time into the urban metro space, where there has been just as much activity. Riyadh Metro Line 7, a massive, massive project, probably the largest ever contract award for any project in Saudi Arabia or in the GCC, only behind, as far as I remember, the Qatar LNG project. This would be the second largest ever contract awarded in the GCC. The formal contract award is now imminent and could be announced soon. This would be about $13 to $15 billion contract, which would be awarded to a consortium soon. It's worth remembering the scale of what's going to be built. 65 kilometers with 19 stations running from Darya Gate to Qiddiya. First phase, Riyadh Metro's first phase, as we all know, is already operational with six lines, and this is going to be an addition to that network. Construction is also ongoing on the Line 2 extension. And then the other major project, which has recently started after almost over a decade, is the Jeddah Metro. The Blue Line section, which is about 35 kilometers with 15 stations, will connect the airport to the Haramain high-speed rail station in Jeddah. And then the other one is the Makkah Metro. The design tenders have been issued for the multi-phase network across 4 lines, I believe, lines A through D. This line is expected to have a capacity of about 1.2 million daily passengers by 2045. So taken together, this is why I keep coming back to rail and transport as one of the genuinely protected categories in this recalibration phase. It's just not the urban convenience anymore. It's increasingly being seen by the kingdom as the economic security infrastructure, given everything that's happening around the regional shipping routes at the moment. Right, I think it's time for our next poll question. Over the past 12 months, has your company increased, maintained, or decreased its focus and resources on Saudi Arabia and its Giga projects? I'm genuinely curious to see where this audience sits, given everything we've just covered. We'll give it a few seconds and then we'll go to the poll results. Right, we've got polls trickling in. We'll give it a bit more time. It's going neck to neck between increased its focus and maintained its focus. Okay, so 49% of you say that they have increased their focus in the market, and 40% of you are saying they have maintained its focus, and only 10% of you think that they have decreased their focus in the market. Interesting results. Right, before we move into the long-term outlook, a quick note on what else MEED is coming up with this year. For those of you who want to go deeper on this market in person, we are hosting our flagship Saudi Mega Projects event from 28th to 30th of September in Riyadh. This program includes a dedicated summit, hands-on workshops, pre-arranged one-to-one meetings, and structured network session. Roshan Group will be our host partner for this event, and we'll have speakers and guests on stage from other Giga project developers like Red Sea Global, the RIA Company, Kingdom Holding Company, Sports Boulevard, and Expo 2030 Riyadh Company as well. You'll be able to hear from them about the project plans, pipelines at this summit. So if you're interested, there is a QR code on the screen. Please register your interest and our team will reach out to you. Right, let's shift gears now and look further out beyond what's already been awarded or is currently in tender towards a long-term pipeline. And as you would expect, the long-term pipeline is dominated by the construction sector at about $145 billion, with transport a distant second at $51 billion, followed by water, industrial power at much smaller values. Within construction specifically, the mixed-use segment leads by some margin. That's largely because a lot of the long-term Giga project scope hasn't been broken down yet into specific subsectors, so it defaults into that broader mixed-use and infrastructure classification. By subsector, mixed-use leads at about $61 billion, followed by general infrastructure at $45 billion, hospitality at 25, leisure at 19, telecom at 15, residential at 14, with smaller allocations spread across cultural, transmission, production, storage, commercial, and other categories. Zooming in to the nearer term, there is a healthy $192 billion worth of individual contracts currently out in the market for Giga projects related work. The caveat is that much of that has stalled pending budgetary decisions, which is consistent with everything what we have just discussed about the recalibration. Breaking that $192 billion number down by status, $92 billion worth of work is still at design stage, $49 billion is in bid evaluation stage, $43 billion at mean contract pre-qualification, and $7 billion worth of work has reached the mean contract bid stage. So there's a very large base of work moving through the pipeline. The question, I guess, as always in this market right now, is one of timing rather than of exercise. Top Giga projects in tender. So this is the watch list slide, if you would like to call it. Several potentially large value contracts due to be awarded over the coming months. We've already discussed Riyadh Metro Line 7, estimated at about $15 billion. There is the main construction works on the King Salman Gate project, an Oxagon AI data center, which will be developed by DataVolt. Just below that tier is the Red Sea Global's Phase 2 at $7 billion, King Salman Park, Q Express, a couple of projects from the RIA, New Murabba and Qiddiya, and most importantly, the National Guard Stadium, which will be delivered by Roshan. The full ranked list is on screen. I would encourage anyone tracking specific sectors to note where your capabilities line up on these projects. There is more, bear in mind, in our full report, which we have already, the QR code of which we have already displayed on the screen. You'll be able to find much more in that full report. Right, one more poll question before we wrap up the data section. I'm going to pull it up shortly. Has your company experienced material cost inflation since the outbreak of the war? Options are no change or a decrease, a moderate increase of 1 to 10%, significant increase of 11 to 25%, or a severe increase about 25%. This one should give us a useful read on how the conflict is actually hitting the margins across the industry, not just the headlines. So we'll wait for a couple of seconds, probably a minute, to see where we are at. This is going to be a very interesting All right. So the consensus seems to be clear within our audience. Majority of you think it's moderate increase of 1 to 10%. That is about 43% of you. Significant increase, 33%. Severe increase, that's interesting, 15%, and no change or decrease in at 9%. So it's mostly sits in the middle. So it's moderate increase to significant increase. Bundled together is about 1% to 25%. Right. Thank you so much for filling this poll. We'll move on to the next slide. I think I have already consumed much of my time given the broad topic of this presentation. I'll quickly try to wrap this through. This is a list of future unlaunched Giga projects. You will be able to see it in your own time when you have the copy of this presentation. Unannounced, but still in plans. And then so what's next? What's pulling all of this together? And what should you actually expect going forward in the market? So I've just briefly pointed down a few things on the screen that might be useful for you to bear in mind. The near-term focus will concentrate around Riyadh Giga projects, specifically the Expo, the World Cup stadiums, projects like Diriyah, Qiddiya, Roshan, alongside King Salman Park, Sports Boulevard, King Salman International Airport, and the road and metro projects supporting them. So this is going to be an absolute near-term focus for the kingdom. You can also expect a renewed focus on religious tourism and related developments in Mecca and Medina, given the proven ROI in those regions. So you'd expect a renewed focus in those regions. There's going to be a shift towards real estate investment as a funding mechanisms by the Giga project developers. This is obviously this is a Dubai-based model we discussed a few slides ago, and is definitely going to accelerate rather than slow down in the future, in the near future. There will be also focus on PPP procurement framework, which will be used more extensively on relevant elements of the Giga projects, particularly public infrastructure like water treatment, labor accommodation, wastewater collection, and power supply. And we'd also expect the completion timelines to keep stretching well into 2030s, given the fact that there are more urgent programs coming up, for example, Expo 2030. So you have the contracting capacity consumed there as well. So the timelines can be expected to stretch well into 2030s. And as a general rule across the Giga projects program. And the Giga projects that haven't yet launched or that have only completed initial works may genuinely struggle, in my opinion, to secure financing to get off the ground in this kind of environment. That's the honest, balanced picture I would leave you with. A program that's absolutely still moving, still awarding billions of dollars worth of work in contracts, but doing so now with far more discipline and selectivity than it did 3 or 4 years ago. So that's something that I would leave you with. And that brings us to the end of this formal presentation. Thank you, everyone, for your time today. As a reminder, everything we have covered today and a great deal more detail that I could fit into this session. I've tried to be very brief, but even then I've taken an hour. There's a lot more detail in our full report, which is available and is accessible via the QR code on the screen. I will now hand it back to open the floor for any remaining questions if we still have time for that. I think we have already crossed the time limit, but I'll stay for maybe 5 to 10 minutes to answer your questions. So if you have any questions, please feel free to put them in the comments box, and I will try my best to answer them. Okay. Okay, so we've got a question here. Do all suppliers fill out the developers' vendor registration forms, or are there alternative routes to getting a foot into the door? Well, all Giga projects, almost all of the Giga projects owners, they have, there is a website, there's a vendor registration portal. So you can visit those websites, register your company, and fill in all the required information, and you will be qualified to bid or supply to their projects. Who is the client for metro projects? Different clients for different kind of projects. Riyadh Metro is Royal Commission for Riyadh City. Jeddah Metro is Jeddah Development Authority. The GCC rail project is Saudi Arabia Railways. So that's what I know on top of my head. Please allow me a minute. There are so many questions that I have to scrape through. I will try my best to pick out the most relevant ones. Someone is saying that the point that we made earlier, projects have moved from invest to build and deploy. There is no expectations for spending to increase. Budgets have been deployed. Well, like I said, there are some projects, existing projects that have been put on back burner, but their place has been taken or will be taken by more urgent projects. So you can look forward and be positive about projects like Expo 2030, World Cup, its associated infrastructure, roads and metro infrastructure projects, big time as well. How many projects are ongoing in KSA right now? For that, you will have to buy our report. You will get those details and much more in that report. Can you advise, please, where is the FDI for the Giga projects redirection currently coming from? Well, the FDI, Saudi Arabia, if you go to the investment strategy, Saudi Arabia is targeting $100 billion worth of investments on yearly basis into the kingdom, and Giga projects are well placed to attract that kind of investment. Now that we have the basic infrastructure already laid out, we've got some assets up and running. Take Diriyah, for example. They opened the Bujayri Terrace. Most of the infrastructure in the first phase is complete. So that makes a compelling case for attracting the FDI into these projects. And in my opinion, they would be open for anywhere, for investors from anywhere in the world to come and invest in these kind of projects. Somebody's asking about the we can share the records. Yes, of course. The session is live on YouTube, so you can watch it in your own time. And for the copy of the slides, we have displayed the QR code at the beginning and in the middle of this presentation. You can go and scan that QR code, and you will be able to download the presentation from there. Okay, I think I have already surpassed the given time limit. If you have any more questions, please feel free to drop in the comments box or contact us, and I will be more than happy to have a look at them in my own time and respond to you as and when I can. Again, thank you so much, everyone, for joining in for this session today. It was great being your host, and enjoy the rest of your day. Thank you.